what's going on my end either. I think somebody
There.
left the YouTube stream going on accident. Oh, no, we're good. We're live. There we go.
I got kicked out of the new platform. I don't even know what you call it. Wise Pub.
Oh, it signed you out.
Yeah. But it left everything up, but it signed me out. So like I couldn't do
Hmm.
anything. It was all
Yep.
frozen.
Yep. It does that to me too from time to time.
I was like, this is pleasant.
Oh yeah, absolutely. Jack, are you here with us?
I'm here. I'm just looking at Corning. I can't believe this thing popped out of nowhere.
Yeah. You were silent there for so long. I was like, Jack is laser focused right now.
This is just, we were talking about this, Jeffrey.
Yeah.
We'll talk about it after we do the disclaimer.
Nice little rip today.
Yeah.
Yeah. Nice and refreshing.
All right.
Replay.
I'm trying to figure out what's going on. I don't know. Who knows? Anyway.
Nobody knows.
Let's see. Go back to there's the share button. It's a layer of complexity adding Zoom and this other platform. Too many screens. Then I have OBS, of course, to make this beautiful background go. And all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade anything and you do it naively without a plan, or if your plan is like, I'm just going to follow Jeffrey and Jack, you need to have your own plan because just in case something happens to any of us, be careful out there. You might lose money. If you want somebody to tell you what buttons to hit, there's people for that, but your mileage may vary. And see if we can find this GLW chart Jack's raving about. Yeah,
What's the
nice little pop. Now, I do caution you, Jack. This can take a spill down because this is a three-wave ABC off this low, coming up into resistance.
yeah?
Double up the resistance. There's two confluence levels of resistance right in the zone, and that can lead to further downside.
I'll see your caution and raise you two puts.
Yeah, hey, yeah, you do just fine. Like I just, throwing caution out there because this pattern exists, and I've gotten caught in it more often than I care to admit.
Yeah. Yeah. What's the news?
News? I don't know. I don't pay attention to news. I
Hey,
mean, I do keep up with a very minuscule amount of news just so I, stay relevant to everybody. Because let's face it, everybody thinks that the stock market moves because of news, but the reality of the situation, the stock market doesn't give two flying flips about news.
Well, good news can make a stock go up, but it can't make it stay up.
Yeah,
Just wondered, I don't read the headlines on this thing. I just wondered if anybody knew something I didn't know, which I don't know anything.
and I mean, we can always ask. I can tap into Grok and see what's up.
Kraken, can't Kraken tell you?
Kraken's okay, but Grok has ability to read X, whereas Kraken does not.
What's X do for you?
X is where everybody goes to whine about their stocks. So I was gonna find out what's the news on GLW today.
Price target raised. Department of Homeland.
Hey, look how fast this thing's going. It's got all these little agents going after. If you didn't know that, this is how I find out current information on stocks. I just go to X, Elon Musk's platform, and then I pop a little Grok icon on the bottom right, and I say, "Hey, what's going on with whatever stock?" And today's main news on is the stock is surging 8 to 9% every day. This momentum builds directly on last week's announcement, optical fiber communication conference, where Corning unveiled new AI optimized optical fiber cable. Advanced multi-core fiber, blah, 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 blah.
Hey, I see on your bio there you don't have professor listed.
Yeah, because I'm a dad and I'm a maker, tinker, engineer, trader.
Professor.
I'm not a professor of anything.
Yes, you are.
Got my trades on there though.
Oh, that's cool. I don't have a Twitter.
It's not Twitter, it's X.
I don't have that either. I don't have any of it, to tell you the truth.
Look at that. There's 108 proper beer trade monies in a row right there. 108 yesterday. Only got $47,000 left to make back. Then I'm back to where I was.
That'll happen real quick.
Already cracking at it. So yeah, so it looks like that multi-core AI fiber is the excuse for going higher.
Big jump for this thing.
Well, it's been making big jumps. I mean, that's, you know, rewind 3 months ago, I said it was the sleeper AI play, or, and when we were down here, and then it's like the world listened to me, and now it's taken off. But there is potential to come back, and the real threat on all this stuff is this helium deal with Qatar. 40% of the world's helium supply comes from Qatar, and their plant was damaged, and they're reducing output exports by 15% currently, and that's immediate. And due to the long-term impacts of the Iranian attack on Qatar's natural gas production, it may put helium supplies into bigger question. Now, each time they run one of these chip fabs, TSMC, Samsung, Intel, whoever else has them, every time they run one of those chip fabs, it uses about 10,000 liters of helium, liquid helium. And there's no substitute for it. You can't use nitrogen, you can't use argon, you can't use any other noble gas. You got to use helium. And a little bit of a problem right now if
You make,
40% of the world's supply is in jeopardy.
can you make helium?
Well, you make it out of natural gas. And right now, the US is like exporting all their extra natural gas and burning the rest of it. And we don't have helium cracking facilities or whatever from natural gas. So a little bit of a problem right now. This isn't just something you spin up either. Like they were estimating it may take 5 years to repair the damage in Qatar and put it back to where it was. So if all of a sudden this helium supply is interrupted, then we can't make chips. TSMC makes all of NVIDIA's chips. If NVIDIA can't get the chips that they've been contractually, that they contractually did with TSMC, then all of a sudden they don't have chips to sell and they can't bring in the revenue. And it kind of makes a big hiccup in this whole AI, giant trade. And we could see stuff pull back like Corningware and SanDisk and MU and NVIDIA and TSMC and could be a threat out there. So be careful, pay attention what's happening, everybody. I talked about it quite in depth on my morning show. If anybody wants to go see that, jeffreytrader.com/YouTube, you can go check that out. I guess I could throw it in the chat.
Surprised Qatar doesn't have any defense.
They haven't needed it. This is just a little country too.
Yeah, that's Iran's whole thing. Go hit everybody that's friends with the US, right?
Yep.
Cause as much disruption as possible.
I'm not a geography expert, but they're right across the Strait of Hormuz from Iran. I took economic geography, but not necessarily just geography. Let's see. Let's pan across the pond here. Yeah, Qatar's a little this little guy sticking out right here. Looks like the appendix off the bowels of the Middle East there.
Yeah. Huh.
So Iran shot the missiles over, damaged their natural gas fields, whatever. So there you go. Boom shakalaka. And apparently there's 40 ships full of helium already sitting here being blocked from going out. And those ships only have 2 weeks worth of cooling on them to keep that helium liquefied. And if they can't keep it liquefied, then that stuff just evaporates off and gone. So that's more hiccup. More monkey in the wrench works right there.
Sure.
So these are all threats to the chip supply and everything going on.
The whole AI ecosystem.
Yep. And South Korea over here, particularly Samsung and SK Hynix, they get upwards of 70% of their helium from Qatar. So that's a big hiccup in Samsung and SK Hynix, which is memory chips to compete with MU. And that's a problem, everybody. These are problems sitting out there. These are cooking. Trump says it doesn't affect us, but it absolutely does affect us.
Yeah, it's a complex world. There's everything affects everything anymore. There's nothing simple.
Yep. So nothing simple about it. And even if Saudis started putting all their oil out over here, that still doesn't get the natural gas out of here and the helium out of here. So it's almost hard to believe that 40% of the world's helium comes from this little place.
Really,
So,
it does. That's a big risk for anybody.
and that actually spills over into healthcare. Like if you need an MRI or any kind of imaging, most of those are cooled with helium. And GE Healthcare is producing a new machine that needs 99% less helium. So if we actually get into a helium shortage and hospitals all of a sudden can't buy helium at any price, we may see more demand for GE Healthcare's new machines. So it could be a sleeper beneficiary.
And a shortage of party balloons, I take it.
Yeah, parade balloons may be in shortage next Thanksgiving. So we'll see.
No, no funny voices. It's a tragedy is setting up here. No party balloons, no funny voices.
Yeah, I tell you,
Helium, who would have thunk it?
let all the gas out. The sleeper gas, right? Everybody's worried about gas at the pump, but this could be the gas that really puts the screws to everything. So,
Crazy.
and we were making guesses on the morning show how long before TSMC admits that helium is going to be a problem. And looks like the average person was thinking about 3 weeks
What's the
before.
poly market tell you?
What? Tell me.
What's the poly market tell you on
I,
helium?
I don't even think Polymarket has anything on helium. Let's see. Let's go find out. Helium. See if they have anything on helium. That's all crypto. There is a crypto called helium, but
What about that one that says, "Will Jesus come back in 2026?" Is that one still out there?
I'm sure it is. I mean, probably won't resolve till
There it is.
4%, baby. People
So
get a four.
all someone has to do is make up a bet and then other people can take it, or does the bet have to be made up? How does this thing work?
I don't know, man. We could start getting into making bets, I guess.
No, I don't want to make. I just
No,
wanted.
not placing them. We make them. We make the come up with crazy stuff and then we promote it for everybody to come bet on.
I don't think you'd get paid out on this one, like you said, though.
Yeah, I mean, how do you prove it? How do you prove? Like, how would you ever get paid on yes? Like, how would
It's a scam.
I don't even know. Like, how would you? Has to be from consensus of credible sources. What the heck does that even mean?
The Pope. Who else?
The Pope says yes. This is. I don't know. Like, even if he was born this year, how would you know?
You wouldn't
Right?
know.
Nobody would have any idea.
Yeah.
I mean, this is almost like a guaranteed 4% return right there.
This whole poly market is, still doing offerings on the private side. Equities in, a couple of Forge Capital have them listed.
You know,
Look up amazing every time.
this is funny too. How many tweets will Elon make between, this week? It's kind of crazy. People bet on anything.
It'll
You know,
be
y-
soon.
this right here was interesting because there were 5 big wallets showed up this weekend. 6-figure wallets, all bet on March 31st. Brand new wallets. Bet 6-figure bets. Betting on yes right here.
Has to be insiders at the Pentagon.
I tell you, man, that's
Nancy
suspicious. That's
Pelosi,
suspicious right there.
Nancy Pelosi, or it's the insiders at the Pentagon. That's all it could be.
It seems suspicious to me that a bunch of big wallets like that would come in and bet yes, but then it's only 14% right now. So that could be a big payday. Oh, yeah, $24 million bet on that.
It's crazy.
You can buy as low as 10 cents.
Any new
Wow.
trades today? I got a new credit spread out there.
Yeah, what you got? What you got? Sorry,
AVG.
everybody. Sorry, everybody. I was, down the rabbit hole here.
It's okay. That's what I'm here for, to pull you back out when you get digging too deep, both back feet. AVGO, we did the analysis on it before
Like, We're
and
just
crossed over.
we're just sitting here consolidating just a little bit under the flip point.
Put the 2354 and 208 out there.
Still in a downtrend, riding that 208.
So even though I'm long the stock, you brought up a good point. I'm short-term bearish, but long-term bullish. But ever since that crossover happened back there, it's been down.
Yeah, lower highs all the way across.
So I sold the 335 and bought the 337.50 call for Friday's expiration.
So call debit spread or call credit spread. Call credit spread.
Sold the 335, bought the 337.50.
Yeah. So why don't we pop this up and look at it, everybody? Dun, dun, dun,
This one's
dun.
been good to me, knock on wood. I go back to the well on this one every week, or even in a short week, because the pay is so good, and I can get deeper out of the money than I can on Nvidia, even though Nvidia has a higher beta. Nvidia is trading really strange with its options. There's no action unless you get really close to the money. Whereas with AVGO, I can still get what I think is far enough out of the money to be comfortable. Yeah, right there. So I got 29.
That's pretty good.
Yeah, 27. What's it say the yield is? 27 cents. Right
I
there.
mean, we'd have to do the math on that.
Oh, it doesn't tell you right there on the review and send.
I mean,
Yeah,
mine with the commission, I would pay 24 cents on $225.
yeah. That's a good return. 29 cents. I'll take 29, 27, 20. A quarter on a 2.5 is good.
So basically, this would be you make 24.76 divided by this is real numbers from a real brokerage. If I place this order and got filled, divided by 225.24. That'd be a 10.9% return in 3 days.
That's high, man. That's a little higher than what I shoot for, but it was there, so I took it, and I'm not at all worried about it.
So look, you divide this out by 3. It's 3% a day, roughly, times 365. That is 1,337% return right there.
Mhm.
See, most people look at that and they're like 10%. That's just not a great
Why
trade.
would you do a trade for 29 cents? What are you, stupid?
Yeah.
Yeah,
Yeah.
you hear that a lot. That just doesn't look appetizing.
Yeah.
I
Why would you try to make 29 bucks? That doesn't make any sense.
29 cents going to do. Well, finish doing the math, Homer, and you'll see.
That's 1337 a year. That's elite.
Mhm.
That's
I love
elite profit right there.
I love the credit spread for all those reasons. It's just like what you're doing with the beer money trade. It's just mine is happening in a slower time frame. What's happening for you over an hour and a half is happening for me over 3 days.
Yeah. Hey, your probability of profit right now, 85%. But you got 3 days for it to happen. Mine, usually I'm going for 99.7% and only exposing myself for 2 hours a day, usually.
Yeah.
Today I did go early on one because I could be like yesterday and a day. Yesterday I could be so far down. Today again, I could be so far down and get this giant credit. I mean, look at that, 770 bucks right there. I've
So it's
already,
super sweet, but this one fits my personality and lifestyle. And we
yeah.
were having that conversation as well, is that I don't want to work for the market. I want the market to work for me. So if I can put this trade on in the morning and do this show with you and be out on the Gulf of America by 1, that fits my personality. I would do the beer money trade with you, but I can't sit here all day.
Yeah,
If
I mean that's,
got a lot of people here. If you can sit here all day on the market, that's a great trade. But for me, I like a 3 day trade to pop it off on Tuesday. Phew, I'm out, and I don't have to worry about nothing until Friday.
and you've done literally hundreds, if not thousands of these,
Yeah,
and you win more than you don't, and you don't really sweat it at all.
never.
They've been very kind to you,
Yeah.
and you don't risk big money on it.
No,
And
no. Yeah, you
yeah,
could do, for 10 grand trying to make 500. That's what we were doing. But now that's a little 10 grand, is doing like 1,000 a week or however more you want to do them. And that's good. I'm good with that.
and see if you do a size of 10, that's a $270 payday, risking 2,200 bucks. And if you were to go somewhat bigger,
I have a guy that puts a 500,000 in on a lot of these. And so funny is, you would think he'd have a hard time getting filled. He has no trouble getting filled.
and look at 50, just $11,000, which is not in the grand scheme of things. If you've been doing this a while, that's not big money right there. Getting 1,300 bucks.
500,000 would be a little rich for me, but he's done it. And I always
I
see that.
mean, who couldn't use an extra 1,300 bucks a week? I mean, that's pretty reasonable right there. And like you said, it's not even difficult to get filled on that big order.
Oh, it's considered a 3 day trade by the CBOE. And I like to not do it on Monday because Monday is crazy. And I like to do it on Tuesday, but I like to let the first hour go by because you guys can answer this. Who controls the open? That's right, the amateur. So
Amateur hour.
I wait an hour, and then I put that trade on, and then I do the show with Jeffrey and do a couple hundred more trades a week, and I'm out. I'm out by 1. I'm a half day dude now.
Well, look at these. I mean, like those. You're telling me you can't get 50 contracts off when the
Yeah, easy. That's the thing. It's wild, and they're tight.
look at the volume today. That's I see how big you played today, Jack.
Yeah, that could be the guy that follows me in. So what is that? Let's see. Like, that's exactly my strike. So I'm telling you, this dude. I noticed when I was in Colorado, and I was sending somebody a message, and all of a sudden, like my alert, I gave my alert to the crew, and I do the trade first just to let you know it's for real, and I put my money where my mouth is. We're all real here, and I get audited by a third party guy. And I was putting these trades on, and then I noticed like there'd be 3,000 contracts come in behind me, and that's and it didn't move the market at all. That guy got filled. That's a
Right.
beautiful trade, man.
Yeah, somebody did 3,400 contracts.
What time does it tell you when?
Yeah, let me break it down even tighter here.
Mine goes out. Mine went out about 11:10 this morning.
Let's see if we can get it dialed in a little closer here with 5-minute chart.
You're on the show. Let me know. Send me an email. What's going on? This guy's only been following me in here for the last 4 years.
Let's see. You put it out at 11:10. So the volume there was like 50 contracts. And then this one hit just
See? All
just
right,
uh,
Will. If you're on the
just
show, tell me who you are.
This was
It,
just now. Somebody just pumped this out
uh,
just now. So
it just got out, so the alert hasn't even been out an hour.
yeah, this just went out with somebody got 2,800 contracts right there, and looks like the people on the show are pushing contracts too because another 800.
Exactly my strike. So no, I would just like to know who the guy is. One guy sent in a thing one time that he bought a plane, a small plane with his profits, and I just want
That's somebody's playing that exact trade because there's
to.
the volume matches on both strikes right there.
Yeah, it couldn't be a coincidence. I don't know.
Well, somebody's pumping it out there. Somebody's listening to us.
Uh, Go for it. Go for it. That's what we do here. We help people get better results from the stock market. And that's an example how someone does it when they put their own money on the line.
Now I'm interested. Like, what happens if you do?
Yeah. Shazam. Or you're still getting a quarter. That's 10%, 26. Dang, someone really hit it. Now it's up to 4,000. There's another 1,000.
I'm just curious what 3,000 contracts looks like. It won't even. This is above.
I don't know how he does it. I don't know how he does it.
They won't
Well,
even let me push that much. It'd be
it's
78. Golly, that'd be a $78,000 payday right there.
Wouldn't that be sweet by on Friday? Now, how much would that require for to make 78 grand?
Hold on. I'll have to do the calculator because it won't pop up on my platform right there. Grab the calculator.
Now,
So,
one of the
so
crazy, go ahead.
it was 225 for one, and we're talking about 3,000. That'd be yeah, $675,000 to make $78,000 in 3 days.
On a crappy little 25-cent net credit.
Yeah, on a crap little trade.
A quarter little nothing, 25 cents. What are you talking about, Jack? That's nothing. Well, it's something. It's something because your capital at 25 cents is nothing, but your capital is acquired by main requirement is determined by the difference in strikes. So if the strike prices are only $2.50 difference, that's $250, right? A quarter on $2.50. That's awesome. And it's very little capital requirement. You can get into the trade for 250 bucks.
Yeah, I mean that seems reasonable to me.
That guy's really going on it now. 5,000 to 4,700. Someone that sticks out like a sore thumb, man.
That's people piling on right here. Like, is everybody doing this during the show, or is it
Yeah, let us know. Are you doing this right now? I would
just
like to know. We
just
all
curious?
do now.
Those
Peel.
those are some big numbers, though. Like, I mean, for us to sit here and talk about doing that trade and those numbers be ticking up that high, I
I'm
mean,
not advertising it. See, the thing is, Journo, is that the most you can make is what it says right there. So it's not like if we all pile this into this trade and drive it up, nothing's going to happen. You can't make any more than you make right up front. So it's
we're
not
not really we're not really driving it up. We're actually driving it down.
lights in, yeah, minus commission. What if he loses? If a trade is lost? Now here's the thing. I would never in a billion years just go wildly jumping into this thing.
There's
Okay.
your risk right there. Like,
Well, the other risk is, they tell you your break even is the net credit minus uh, the spread minus the net or plus the net credit, but that's not how it is in the real world. So I don't need to do this now, but if I would just done this trade, and if the stock gets up to around 331 or 332, I would look to start maybe have to unwind it because if it goes higher, if it, you don't want it to settle in between the two strikes. And if it goes over the strikes, you're going to lose 100% of what you put up.
yeah, max loss is shown right there on mine, right there, 228.
Unwind it at any time, and if it gets close to the strikes, then you might want to consider unwinding it. And you might want to consider doing nothing if you think it's going to be out of the money at expiration, or if it's really going to rip over 337.50, you could buy back the 335 call. You'll take a loss on that one, and the 337.50 will continue to go up if the stock goes up. That's the riskiest of the three choices, and it also requires the most capital. So But this is what I do every week. And when we talk about the market, doing it live, these trades, people wonder like, what should I do? Which one's the best? Well, there's one's not really the best. It's the best one is what fits your lifestyle, right? And yeah, we're at different different stages in our life. I see that comment, but I've been trading like this for a long time, a long
So,
time. Not all day anymore. I used
so
to, but
what are the potential outcomes? Outcome one, we stay below the strike, 335,
we keep
and you keep up.
100% of our net credit. Options expire worthless. That's
Option number two, this thing lifts off, goes right on through, never stops, never gives you a chance to get out.
blows takes all of our money. And why does it take all of our money? Well, we're going to get called out at 335. True. But we also have the right to call somebody else out at 337.50. So the most we can lose is the difference between where they call us out and where we call out the next fool. And that's just $2.50. Now, if it was just a naked call, we'd be out of business. That's
Yeah.
Sell that at 335, you may have to go buy that back at 360. You might not even have the money to go buy it back at 360.
So the max risk is 250 bucks minus whatever you get paid in the beginning. I mean, that's really what it is.
So it's affordable for all size accounts. And it's really a great learning tool. This strategy is, you know how you talk about during the day at a certain time of day, like close to noon, all the time value will start draining out of the premium. You'll watch that happen with this trade. Even if the stock doesn't move, Tuesday, Wednesday, Thursday, Friday, that will dry up to nothing, those options prices. Even if the stock stayed right here, those prices would drop around 25% a day or more. If
And
go up.
the third outcome that was asked about in the chat, what happens if we come up and park right in the middle of these two?
Park where you should in the no parking zone, no parking on the dance floor. That would be a terrible outcome because you would have to you take a whooping loss on the 335 and you would not get to use the 337.50. That's why I like to use $2.50, not $10 difference in strikes. There's some times when that works, like with your trade, you want it wide. With my trade, if these were $1 difference in strikes, that's the ultimate because that's the least likely you're going to get no parking on the dance floor, right? There's no room between there. So the other main thing is I always think you got to be 100% responsible for your actions. And so the only way you could get this stuck to you is if you let it happen, by not buying back that 335 or unwinding the whole thing. So maybe you make 25 cents and you unwind it. Let's say it goes to 333 and you decide I want to unwind it and you give back 20 of the 25 cents. You still made some money, right? So it's very forgiving, it's very flexible. You can go super deep out of the money. You can have a 97% win rate. You can do this for years, man, 16 years. That service is now 15 years old. You could do it every week, simple, small account, flexible, friendly, do it up, bull market, bear market. If everything turns bullish, we'll do bull put spreads, but you can do bear call spreads till the cows come home. Uh, Not
This
quite
is,
set it and forget it. That's true, Mike. You got to have that tripwire, as I call it.
yeah, you should. So you're saying, you put an alert like at 3:30-ish
Yeah,
and then start watching it if it comes above that.
yeah. If it touches that, that's going to get your attention. But I'll tell you how much it is a set it and forget it for me is because I wouldn't do anything with this. Like this is my Colorado fishing trade, right? There's no service uh, outside of the cabin. Um, so if I'm fishing just even down the road, I don't know what's going on with the market. And that's cool because I won't take any action on this trade until about 10, 15 minutes before the market closes on Friday. That's it. So I don't even have to worry about it till then.
Any questions?
Yeah.
We pretty much covered everything, I think, on that one. And right now, the reason you're bearish on it, short-term bearish, is because the trend points are down. It all stems back to I turn my line off here. It
Yeah.
just stems back to the green, blue, and red lines.
Helping me determine what is the trend. You don't need volatile stocks, Chris asks. You can do this on everything, but I find that the beta over one on this strategy really helps. Otherwise, there's just not as much cheese in the trade. And I hate doing it on ETFs because you have to get too close to the market price. You would actually have to place a trade like within the range right here, right?
Yeah.
Above the red and below the blue. That's on an ETF. That's too tight. I like to be way the hell out of the realm of possibility almost. And you can't do it with an ETF. So beta, you don't need a 2.2 beta. NVIDIA is a great one. Goog.
So you're sitting right here, 335 with your position. Your trend points are down here. You could set alerts at both trend points if you wanted to.
Yeah. Not that I would do anything if it hit, alerted me, but the price of the stock doesn't matter. I could make a list of benefits on this thing that would be amazing. Small account friendly, price of the stock doesn't matter. The only thing that matters is the difference in strike prices. You could do it on AVGO like Monday for Wednesday or Monday for Monday, with 3 day a week options. The sky's the limit with these things. I just like AVGO because once I have a good trend and I got a good feel for this particular stock that I'm going to ride this trend down on the credit spread side and not worry about my long-term hold. But I like going back to the well. And you don't need a bunch of different stocks. You can load up heavily. We just saw that one dude put a half a brick right on.
The amount of money that's getting put on this is stupid right
I mean,
here.
it's still going on. I don't know what is happening. I wonder if somebody's reselling my alerts. That's nuts, man.
Look
That
at
just
that.
doubled from when we got on here.
Yeah, it doubled in the last, just since we started talking about it, 20 minutes ago.
And nobody is going to take and reveal themselves as being the whale who's been doing this with me for years.
I mean, look at that.
Yeah.
Somebody put that out in a bigger,
Yeah.
somebody with an even bigger following put that out. Had to. I mean, look at that.
He came into the chat and said he bought an airplane from this, and I thought he was BSing me because he had a funny name. He didn't use his real name, but he used to be in all the time, and I never knew who it was, but still grinding. It's
Well,
going to be the winter chicken dinner for a lot of people on Friday.
I mean, look at that. That volume diminish, just
Bam!
squashes anything else.
Wonder what other people see that aren't really doing credit spreads. I wonder what they think when they see that, like other options traders. That's unusual volume, but what would they make of it?
Let's see. Hold on. Let's see what we can find here. I've got this scanner. Let's see what it picks up.
And the other thing I like about this is it doesn't even have to go up. It doesn't even have to go down. It can just go sideways and we win.
Yeah, I'm not even seeing the.
Both sides aren't on there. No, that's just directional stuff. One way. This guy did an intentional credit spread right there.
Yeah, I'm not seeing. Yeah, 335. I'm not seeing that strike anywhere in here.
Sneaky little bastard. Got that trade done without even showing up on a scanner.
It's interesting.
It is. I just wish I knew who it was, he or she. Carol E. Maybe it's been Carol E. the whole time.
Yeah, look, a lot of put flow.
The alerts is the weekly options profits.
There's a
Why
lot.
not Condor? Because I got to get it right both ways, Mike. I don't want to do that. So
Yeah,
how this all got started was in 2010 when weeklies, well, before 2010, I was doing this once a week with other people's money in a fund. And it was okay, but I can only do it once a week because it's the last week of expiration that time value will decay. Time decay kicks in the most. So when there was only monthlies up until 2010, that's all I could do, and I could only do it that third week of the month. Weeklies came out in 2011. They came out in 2010. Weeklies did, and it took me till November 2011 to stop losing money and beating my head against the wall and having self-loathing because I finally cracked the code. then since 2011 to now, it's just been on like Donkey Kong. Yeah, no iron condor. No, the price I pick is not just above the 54 EMA all the time, Dennis. I want to be as far out of the money as I can be, but it's really going to depend on the individual stock. It's just not that simple to say take the 54 and go there.
Here's
But
this
what about
interesting. This is interesting right here. AG, a 25 and a 30 strike for December. Like 10,000 the normal 10,000% normal volume for both those strikes. This is a silver company out here in December. Look at that big chunk, big chunk.
it's interesting when it shows up, but you always don't always know what to make of it, and you could get the wrong idea, especially when you look at what we've done here with AVGO. If you're trying to look for an edge based on that data, it's hard to see.
That looks like somebody buying though, right there,
Mhm.
because those prices aren't going down; they're climbing as the volume goes up. See what this one looks like. Kind of the same thing over there. I see it. It does get my attention there because that could be a call spread.
Easy.
Uh, 5,000, 5,000, and then 2,000 other contracts got bought because they saw that big volume come through.
So he did a 5 wide and made good dough. He made 2 bones maybe on 5. That's strong.
Yeah. That's 20% right there. Although it could be somebody buying it doesn't have to be a debit spread or a credit spread. It could be a debit spread for $1. And somebody looking to take $1 and turn it into 5. And that's the other thing that could be happening there. So you never know if it's a credit spread or a debit spread. That's the problem when you see two big volumes coming in like that, 5 wide. And
I
that
just
might be
I just like to see myself do the trade and then how many other people do the same trade. And this one is pretty easy, you could tell.
25, 30. That's actually, I'm going to copy that trade right there. I'm going to get in for one. Have to change the account.
What do you like about that trade?
Because I think silver is going higher again after we get done with this current crap.
So this is a debit spread, folks.
Yeah, that
Opposite
was
of
a
credit spread. He's going to pay to get into this trade, whereas credit spread, you get paid to get into the trade. Here,
this is just, when I was talking last week about I just do weird trades every now and then just to see what happens. Like that, I'm willing to put $100 on it just to see if that plays out because that's my bounce pattern right there. See, when I turn this on right here, that's the bounce.
perfect.
Where does it go? 35. So
Perfect.
if I get in at 25, 30, it goes right on through. That's a potential 4x on my money. Spend $1, make 4x, make 400 potential.
So let's walk the good people through why a debit spread rather than a straight up buying a call.
Well, see, if you just straight up bought a call right now, $4 right there, $400. Now, for that to even be worth 400 on December 18th, we have to be at 20, almost at 30 right there. Just for this to be worth what you paid. It's not even to make any money.
It's a big
To make
ask.
any to make any money, you got to be up here like 35 to double your money. To make 4 times your money, holy crap. we have to be $20 in the money. We have to be at 45 to make 4 times the money on that
It's,
25.
that exposes the myth that people want to make big return on their option call, but look at how far the stock has to go for you to get that profit.
Yeah, you have to go to 45 to make 4 times your money. Plus you get your original back.
All right, now what's a better way to skin this cat if I think it's going up and I don't want to just buy a call and waste all that money because it'd have to move too much? What else could I do?
So inside the move to 35, you could play this debit spread that I see right here, where you buy that, you sell one 5 strikes higher, costs you about $1, which I didn't get filled yet because it's ticking higher. It costs you about $1, and that means the max you could get paid is the difference in the strikes minus the cost that it cost you to get in. So $4 is the maximum payout. That's 4 times your money, right? On the profit. Paid $1, 4 times your money, $4. That's the max you can make.
Smart move.
So that's how you amp up. Now, this is not universal. Like sometimes the debit spread doesn't pay. Like if it's going to cost you $3 to get the debit spread and you can only make $5, that's not really worth doing.
Defeats the purpose of a debit spread.
You know, when you get in one that's what I really like is when a 5 wide costs like 50 cents. Yeah, think about that for a minute. Because then you have $4.50 worth of upside. That's like 9 times your money. That's a high potential. And that's when we did the Rigetti Spaghetti and I did the debit spread when you just sold shares. That's how I got like 300% return and you got
52.
52%. So that's that's how you amplify. You can potentially amplify if you can find a properly priced debit spread. What's a properly priced debit spread? I think on a 5 wide, $1 or less, 20%. You got to be able to make 4, 5, 6. I really like them when they're like 10 wide and they cost less than $1. Really like those. Really like those. They're not easy to find. And you got to be high conviction too. Like this pattern is my pattern. Like, why was I willing to do that? Because when I pulled up the pattern, I was like, oh, dang. Even when that wasn't on there, I was like, oh, that's the roadmap bounce. I've looked at enough charts, even without seeing it on there, I knew it was hitting the roadmap line. That bounce right there sets it up for 35. Now, the activation comes in right here, but that's already at the short strike. This thing will already be sitting in profit. And I've got a lot of time out to December. So the average one of these trades plays out in 45 days. The standard deviation on that is 35. And that's candles, not calendar days. It's candle days, so market open days. So 3 standard deviations on this for time-wise is 150 candles or 7 months. So 7 months to play out to the target, 35. From right here in March, that's April, May, June, July, August, September, October, and I don't run out of time with my December play. So I did all this math in my head because I've done this a lot over the years. So I knew I couldn't go to October. So I'd run out of time. And it just happens that these big plays are playing in December. So I was like, I did all this while I was sitting here talking to y'all. Like, this is how my brain works. I already knew that December was the place to play if I was going to play this kind of pattern.
I'm with you.
So maybe I get filled, maybe I don't. I didn't get filled so far. It's just sitting there. I'm not willing to chase it up. So if it fills me, it does. If it doesn't fill me, I'm not playing. I'm only doing one. Why would I only do one if it seems like such a good play? Because the high probability trade doesn't activate till we cross above this. Right now, this is a high risk to fail and go lower. So risk $100 out of an account that's $50,000. If it hits, great. I'll find something else too. If it doesn't hit, I live to trade another day. Everybody understand psychology in this? Play small, make a nice win. If it works. All right.
Are you giving these personal trades in your algo alerts?
What algo was that? There was no algo there. that was a trade just for y'all. I was sitting here screwing around, found it in the market.
I like it.
I mean, I was digging in bullflow.io and you watched it all happen right there. I mean, I was just looking in here, found that, went checked it out, went checked out the chart. I mean, you saw the whole process. Maybe you didn't follow along on what happened, but maybe you should go watch the YouTube show or the replay from today. All I did was pull up this unusual scanner on Bullflow. Found the data. There's some unusual stock volumes too. And this thing's interesting. The tool I use the most is this Gex scammer. Gex Gamma Exposure. Because I play those short dated NASDAQ trades. Short dated is in 2 hours. And I like to stay below where the gamma is with my trade. So that's why I use Bullflow. And it's like $30 a month. It's like the cheapest gamma scanner I've found.
It's like right on your pattern. Classic 3-day rest.
Yeah, I mean, if this thing takes off, breaks through that, cruising on up here, it could play out in a month. I probably only get like a double, maybe a triple if it does that.
It breaks that first purple line. What are the odds that it goes higher?
So if it breaks the 618, 61.8% right there, the pink purple, if it gets a daily close above that, we now have 75% historically that we're going to cruise on up here to 35.
Nice.
So this is playing early, and that's one reason why I only put $100 on it instead of a higher amount of money for a higher probability trade. The likelihood it works from here, I don't know, it's closer to like 45%.
What kind of time frame do you see this playing out?
So I kind of outlined it there. The average, once it closes above this line right here, from here to here, the average is 45 days, 45 candles, 45 market open days, which is 9 weeks, right? Five days a week. Divide that out. That's 9 weeks. So 2 months and a week is the average. Now, 35 candles is the standard deviation on that. So 3 standard deviations to get you to the 99th percentile. That's 150 candles, which works out to 7 months. And that's why I said October, this should play out by October, which if you went with October, you'd run out of time. So December makes the ideal spot to play. If you're going to play the debit spread from right here that hasn't even activated, that gives you a little extra time for it to activate and to cruise on up to the target. All right, it's just math, high probabilities. That's the professor in action right there.
There it is. You got to add your Twitter handle.
It's bullflow.io, bullflow.io. I have a link. It gets me a couple bucks if you use it. Let me pull it up and throw it in the chat. I threw it in there yesterday. Bullflow.io. Can I copy the link? No, I cannot. Copy the link.
Here you go, Dennis.
Copy. And I'll throw this in the chat. There we go. I get a couple bucks if you use my link. It's not great. I mean, it's like it literally is a couple bucks. Unlike the if you use the link for PXO, I get a fair chunk, but that one I get like a couple bucks if you buy it. Even if you buy a year, I get a couple bucks. So
cool. It's a good tool. How often do you use it?
I use it every day. Especially the beer money trade. I wouldn't. Now that I've been using it, I found this thing on X in December. This heat map thing. They posted some pictures of it and said, check out our tool. And I was like, ooh, I've never seen anything that actually graphed strikes and expirations and gamma in 3D. Like that's what this is. This is like a 3D map. Shows you the expirations across the top, shows you the strikes down the side. And so you can see where the gamma actually is. Usually people chart it like this. Usually, almost everybody I've ever seen charts it like this. And they aggregate all the strikes together on expirations, and then aggregate all the expirations together on the strikes. Well, that doesn't tell you where it's going to go today, but this heat map shows you where the concentration is today. Like, where's the risk today? The biggest level being played today is 585 on QQQ. That's the biggest level. The second biggest level is way out here in June. Does that make any sense? Not to me.
Not to
But
me.
not to me. Like, why would the second biggest level being played be in June, 3 months from now, instead of today
Yeah,
or this Friday,
yeah. I was going to say, or a week away.
or even the end of the month? Like, you would think most of the players would be playing Qs between now and the end of the month, but no. Biggest day is today. Second biggest day is out in June. Well, that doesn't make any sense. Third biggest day is at the end of the week, right here. Now, red gamma tells you that the market makers are hedging their positions in the same direction as the market's going. Now, this gets into controversy, as Jack and I talked about on the show here. But when you're buying and selling millions of dollars worth of options, you got to keep it delta hedged, right, Jack?
That's right. You just got to be not at risk.
Not at risk. You don't care if it goes up or down, but you've got to constantly adjust when the market does go up and down. So when the market is in a red zone, which is called negative GEX, market makers hedge in the same direction as the stock flows. All right, this goes back to a lot of math and theory and, smart people, smarter than me, smarter than Jack. And so when price is dropping, market makers tend to be selling to stay delta neutral. When price is ripping and we're in red, the market makers are buying to stay delta neutral. That changes when we get into the green. All of a sudden, the market makers are trading against you. For every dollar higher it goes, they're selling. For every dollar lower it goes, they're buying. That mutes the price action when we get in green. It exasperates price action, makes it more volatile. And in essence, that's why when we're dropping, we drop faster. And when we're climbing, we climb slower. Has a lot to do with the options and the muting effects or expanding effects that they have. And to me, looking at it in a gamma heat map, where you can see the players for today, tomorrow, the next day, where they're positioned. Sometimes you can find paths. They'll draw paths in here, like there'll be big levels here, big levels a little bit higher tomorrow, big levels higher the next day, and big levels even higher the next day. And usually it'll tick right up that pathway. Now, that doesn't exist today. And I commonly call this a bubble, where you can see the bright red levels along with the blue in here. I call it a bubble. And price tends to hang out with the bubble all day because of what Jack has said over and over. Market makers love to find the big volume price and keep price hanging out right there and just keep selling contracts. And that happens more often than not. So it gives me extra confidence to come down below the bubble, which is all the big levels, and I sell my put spread. Usually it corresponds with about 3 standard deviations below the money, and I don't ever have a problem.
Nice.
So Jack, if there's anything you have to say that conflicts with anything I said, I'd love to hear it.
Oh, you nailed it perfectly. I think sometimes when we talk about delta neutral and things like that, it clouds the issue if the stock is going up, if or the option is going up, whatever it is. They're going to average up. They're going to try to be flat, but their average price is going to go up. And when the option or the stock's going down, they're going to average down and try to be as flat as possible because they don't want that net capital computation going against them.
And see, that to me, that's the biggest, one of the biggest perpetuated market myths there is that market makers push price around and they care where price is supposed to go.
Can't do it.
But Jack sits here, he was a market maker, and tells us that market makers don't do that. There
Well,
is a
good. I took some losses I wouldn't have taken if I could push it around, and you can't do it. You just can't. You have limited capital and you have capital rules. You just can't be undisciplined like individual traders can. You have a whole net capital computation. The firm would be out of business in one day on a mark to market that they don't have the capital for. So you're always
now.
just covering your ass on every trade.
Now there are entities out there that do push the market around.
Yes, there are.
And They're those big trader desks like Citadel and JP Morgan and Bank of America and Goldman Sachs and Morgan Stanley.
And they don't have to push it much. If they could push it 5 cents, that's a lot.
But they can also push it through strikes if they want to go get one of these big levels and help out a market maker friend or something like that. So they can push it around in these gamma bubbles and go get people and buy the options off of the market makers. So there's some collusion and stuff that happens. I'm 99% sure.
I wouldn't know.
I wouldn't bet. I mean, I wouldn't bet against that. That's for sure.
I wouldn't know about collusion. What's going on, Blake?
Man, sometimes I don't even know. I'm just here. I got these guys working outside my house today. They're being very loud, so I've been kind of trying to stay off the mic for as long as I can because I don't know when they're gonna throw something down. But so today we got the same thing as yesterday. Going back to that. Apparently people were liking it. So it's the triple threat trader. And I'll let Jeffrey kind of tell you some more, but it's really cool for those of you that are impatient. I mean, that's not all of you, but maybe you're a day trader, maybe you're like me, you don't like to risk swinging. Then this could be something that really kind of fits the bill. So Jeffrey, you want to tell them a little bit more?
So this pattern right here, I was talking about taking possibly 7 months to play out. But what if it played out on average less than an hour? And you could do that like on SPY, it's super liquid with the 1 minute chart. And look, right here is the pattern. Look, there's the high, here's the low, activation, potential for it to come up here. What if you could get alert on this? 75% likely to play out right there. Would that be something you're interested in? Because Triple Threat Trader does this. It finds those activations, those entry points, gives you an option play. They usually last less than an hour to play out, either to the target or the stop, which is always $1 below the low. And these happen multiple times a day. Certainly, 3 to 5 times a day between SPY, QQQ, and IWM.